Karen, you're deciphering the quarter. What do you make of it?
Yeah, so, I mean, Kate touched on really the high points. I mean, retail was good. That North America margin was great. But I think the story really here is AWS. And right in line-ish, is just not quite good enough right here. To me, the miss, whatever's being priced in for the guidance, rather, being weak, not that it was a miss, it was a beat. But I don't really give that much credence at all. They're not great at forecasting, and I don't think they really care about forecasting.
And who wants to be a hero and give a strong forecast at the beginning of the year?
With a volatile year.
Right.
Yeah.
Where tariffs are unknown and lots of things are unknown.
The leap year thing is just ridiculous. I mean, everybody's like surprised by leap year.
Not ridiculous. If you were born on February 29th, it's not ridiculous.
It's not ridiculous if that's your one birthday every 4 years.
I'm just saying.
But if you're a company that wants to give guidance,
that's what you meant.
And you're like,
put in the number of days in the first quarter.
Okay. I think the setup was not too different than Alphabet, right? When you think about it, it's trading at an all-time high. It rallied 10% right into the print. It was down a little bit in sympathy when Google was down 8% yesterday, but it's like the same thing that happened. You know, if you think about Azure, if you think about Google Cloud, they came in like basically in line, but it wasn't good enough. You know, and I kind of disagree a little bit, Karen, on that operating income guidance that they gave. You know, the consensus was 18.2 billion. They guided to 16 or 14 to 18. So the midpoint is 16. That's down like 11% or so. You know, and what I think is going on here, these companies have invested so much in the Capex, and this company, they spent $75 billion last year. They said it's going to be higher. That's not too different than what we heard from Microsoft and Google and Meta. But again, I'm surprised the stock's not down more, to be frank.
Really?
Yeah, because I mean, like, look where we are in the trade. Look at how a lot of these names are also, they're seeing that like the fever break a little bit. So let's see how this thing trades tomorrow. I suspect it trades lower.
Call me Pollyanna, but when the AWS numbers came in line, I thought, oh, well, maybe it would actually catch a bid because there's relief after Microsoft and after Alphabet. There's relief that they were able to report an in-line for cloud.
I so much like Melissa better than Pollyanna.
I know.
To say
We're completely different people.
You know, operating margins, to me, 11.3%, good for them. I mean, year-over-year improvement, and obviously better than the street was looking for. The Capex number is probably scaring people. I'm sure that people pouring through this now. I think it's up like almost 30% higher than the street was looking for, and it's up 91% year-over-year, which is either really good or really bad. I'm sure NVIDIA is probably higher on the back of this. I would imagine we'll see if that lasts. But I'm sort of in between Dan and Karen. Like, I think it's fine. Like, we've seen sell-offs on the back of Amazon quarters before that a week and a half or so later get bought up. So I think that's what we're probably in the midst of now.
Yeah, I'm kind of in the fine category, not exciting. But I think it's important to note this, that Amazon's performance to the market, which is important, to the Qs, which is important, to the XLY, to the entire consumer discretionary sector, all peaked during COVID, right? So Amazon was such a winner, of course, for the reasons everyone's just ordering packages, staying at home. Its relative performance stands to this day, almost 4 years ago. So the question is, does it have catch-up potential with its sector, consumer discretion, with the Qs, with the market? Ultimately, I think yes. And I would say the weakness is something to take advantage of.
Just one thing about the guidance. The operating margin guidance, that is pretty wide considering the revenue guidance. So that it's just very vague.
Right.
So I really don't think we should
just discount it entirely.
Yes.
Yeah. Well, if the Capex number comes in line with what the street is expecting for 25, which is $85 billion, which would be a step up from the 75 expected for the total of 24, is that going to be a positive?
Well, it depends. I mean, listen, Amazon, you don't hear them about building the sort of foundation model that some of their competitors, right? So they're really building an infrastructure for AWS, so they have the capacity to serve a lot of those clients, right? So they partnered with companies like Anthropic that have the Claude in the cloud. You know, that model there, they've invested $8 billion in that. So their infrastructure build, I think, is a little different than, let's say, Google that has Gemini and they want to support that. And then obviously Microsoft with their OpenAI relationship. So again, I just don't think this is as interesting. I think about their cloud growth was 19%, and you know, Google and Microsoft got punished for coming in a little below that $30 billion number. So I don't know. They have market share issues here too. I think those other names have kind of nipped at their butt a little bit. So.
That sounds
but I don't know.
No, I'm just saying. I don't know. You know, FX impact, we're hearing it more and more, and they actually made a point of it in their guide to talk about the potential, the outsized impact of foreign exchange, which is, I think, again, we had Caleb on the other night, and he talked about that was something that's crept into the vernacular. So, again, I don't think there's anything to run away from. We've seen sell-offs before, post-earnings with Amazon. If you go back and look at a chart, you'll see a number of them over the last year and a half. And I just think this is sort of that, middle-of-the-road type of thing we've seen before with them.